Welcome to the Deep Dive, your shortcut to being truly well-informed. Today, we're taking a magnifying glass to Belden Inc's second quarter 2025 results. We've pulled out the key insights, the strategic moves, and what's really interesting is the market's reaction. Bit of a story there. Let's jump right into the numbers then. Belden, well, they delivered a genuinely robust second quarter, flew past analysts' expectations, really, on both revenue and earnings. Adjusted earnings per share on $1.89. The consensus was, $1.76, so a comfortable beat. And revenue, that came in strong too, $672 million against a $658.4 million consensus. That's an impressive 11% year-over-year jump. And importantly, 5% of that was organic growth. Solid performance. Absolutely solid. And it wasn't just hitting those headline figures. What's really compelling, I think, is the underlying strength you see in their operations, their efficiency. We saw some pretty impressive margin expansion. Gross margin climbed 70 basis points year over year, hit 38.9%, and adjusted EBITDA margin up 50 basis points to 17.0%. That's healthy. Even more telling for the future, maybe, order activity was really strong, up 16% year over year, which gives you that nice book-to-bill ratio of 1.05, shows demand pulling through, and free cash flow, looking at the trailing 12 months, was very solid, $216 million. Gives them room to maneuver.
Okay, now here's where it gets a bit, fascinating. Despite these really stellar numbers, right, the stock actually dipped on the day. Noticeably, closed down over 3%, and the volume was way up. Kind of a head-scratcher initially. But then, and this is critical, the market seemed to digest it pretty quickly. Stock bounced back strongly, hit a new 52-week high just a few weeks later. So what do you make of that? That initial wobble, then the strong recovery. Yeah, it does make you pause, doesn't it? Right. That initial dip, I suspect, was probably a bit of a knee-jerk reaction. Yeah. Maybe some profit-taking after a good run, maybe algorithms doing their thing. Yeah. But the recovery, that quick snapback, tells you the real story. It signals that the underlying narrative Belden's building, this whole solutions transformation thing, it's really starting to resonate with investors looking longer term. Right. They're not just posting numbers, they're showing a real shift in how they operate. And the market, it seems like it's starting to fully buy into that now.
Okay, let's unpack that transformation then, because it feels like it's absolutely central to their performance and, what they're signaling for the future. What exactly is this solutions transformation? How's it playing out on the ground?
Fundamentally, it's about Belden moving well beyond just being a components supplier, a cable company, if you will. They're shifting deliberately towards higher value integrated solutions, stuff that leverages their deep know-how in connectivity and networking. And a huge piece of this, a central pillar, is IT/OT convergence.
IT/OT, we hear that a lot.
Exactly. So think IT information technology. That's your data, your communications, the office network side. Then OT operational technology that controls the physical stuff. Your factory floor, power grids, industrial processes. Historically, these were totally separate worlds, different protocols, different priorities. Belden sees itself as, uniquely positioned to bridge that gap. Right. To offer unified solutions that bring IT smarts, IT security into those OT environments. It's more than just an upgrade. It's like building the central nervous system for modern industry.
Building the nervous system. I like that analogy, captures the complexity. And you mentioned this quarter gave us some really concrete examples of this strategy working, not just theory. Can you walk us through those big wins?
Absolutely. They highlighted two, and they're quite telling. First, a multi-site solutions award with a, quote, leading hyperscale data center customer. Big name, obviously. And this wasn't just selling cable runs. No, this involved deploying Belden's industrial-grade switches, heavy-duty stuff, to support a critical PLC system. That's a programmable logic controller. And this was specifically within an advanced modular cooling setup for the data center.
The cooling. Crucial.
Totally. And it's a perfect example of IT/OT convergence, delivering the super low latency, the fast recovery times that you absolutely need for AI workloads today.
Yeah, and I thought it was interesting how management described it. They called it a multi-million-dollar, multi-year deal focused on the gray space. For anyone listening, that means the supporting infrastructure, right? Cooling, power distribution, not just the core servers and switches.
Exactly right. That gray space is becoming incredibly complex and critical, especially with the power demands and heat generated by AI. Belden's industrial expertise, that rugged reliability, it's a natural fit there. They're turning what might seem like just plumbing or wiring into a high-performance integrated system. It really shows their engineering chops.
Okay, so that's a significant data center win, playing right into the AI infrastructure build-out. What was the second major win they highlighted?
The second one was securing a global specification with the major U.S. automotive manufacturer. This basically positions Belden as the go-to single-source supplier for advanced connectivity products. Think assembly lines, related factory equipment. It's a multi-year opportunity. They said about $40 million over 3 years.
40 million, wow.
Yeah, and what's key here is it directly taps into these bigger trends we're seeing. Reindustrialization, reshoring manufacturing back to the U.S. As factories get smarter, get modernized, maybe built closer to home, the need for sophisticated, reliable connectivity like Belden provides just explodes.
That's a massive validation, tapping right into those macro shifts. So looking at their business segments then, how did these strategic wins, this whole transformation, translate into the actual numbers for automation solutions and smart infrastructure?
Well, the automation solutions segment, that had a really strong quarter. Revenue was up 10% year over year, 8% organically. And importantly, the profitability was strong. EBITDA margins hit 21.4%. That shows a value-add strategy working.
21%.
Orders were robust too, up 11% year over year. They saw double-digit organic growth in discrete manufacturing and energy. So this segment is clearly where that solutions transformation is really hitting its stride, driving margins and stickier customer relationships.
And the smart infrastructure solution side also saw good momentum.
It did. Revenue up 13% year over year. EBITDA margins improved too to 11.8%. Order growth was healthy, given that book-to-bill of 1.1. So demand is there. They're seeing strong pulls from specific verticals. They're targeting healthcare, hospitality, and data centers, obviously, which we talked about.
Yeah.
And their broadband business is humming along too. Fiber products, fiber to the home, DOCSIS upgrades for cable, that's contributing nicely.
Now, they did mention making increased OpEx investments in this segment. Operational spending, what's the thinking there? Investing more, even if it might slightly hit short-term margins in that specific segment?
Yeah, it's a classic investment for future growth story. Those extra OpEx dollars are specifically aimed at accelerating solution sales, especially in those high-growth verticals like healthcare and data centers. So yes, it might slightly compress margins in smart infrastructure in the very near term, but the strategy is clear. Invest now to build the capability, build the sales engine, to capture much larger, more profitable deals down the road. It's about driving long-term growth and operating leverage for the whole company.
Makes sense. Investing ahead of the curve. Let's shift gears slightly. Capital allocation. How's Belden balancing this investment in growth with, shareholder returns and keeping the balance sheet healthy?
They seem very disciplined on this front. Balance sheet looks strong. Net leverage is reasonable, 2.1 times net debt to EBITDA. And they've got a longer-term target of around 1.5 times, so they're still aiming to deleverage further.
Okay.
They've also been active returning cash, bought back $100 million in shares so far this year, and they still have $240 million left on that authorization. Plus, a financial flexibility looks really good, no major debt maturities until 2027, and all their current debt is fixed rate, averaging around 3.5%. That's pretty attractive in today's environment. Gives them stability.
That kind of financial footing definitely helps. So with that flexibility, how are they thinking about M&A acquisitions, especially tying back to this solution strategy?
They describe the M&A pipeline as robust and, crucially, very strategic. It's focused squarely on closing technology gaps needed for that solutions transformation. So they're looking at things like edge capabilities, computing closer to the source of data, cybersecurity for industrial environments, wireless technologies, all critical for end-to-end IT/OT.
Right, the pieces they need.
Exactly. And also gaining better direct access to end customers, getting closer to the action, and enhancing their software side, particularly around their Horizon platform, which is about managing and making sense of all that industrial data. It's clearly about buying capabilities of market access to speed up the transformation, not just, buying revenue.
Very targeted. Makes sense. Before we look ahead to Q3 guidance, any other sort of finer financial points that stood out? Tax rate, how they handle copper prices?
Yeah, a couple of quick things. The tax rate in Q2 was unusually low, 12.3%.
Yeah.
That actually boosted EPS by about 0.11 cents, thanks to some one-off discrete tax benefits. Important note for you listening. Well, the full year rate might be around 15%. Belden expects the long-term rate to settle closer to 20%. So don't bake in that super low Q2 rate forever.
Good clarification.
And on copper, obviously a big input cost, so they seem pretty methodical. They generally wait a bit to confirm price trends before adjusting their own prices, giving distributors about 30 days notice. And they keep a couple of months of copper inventory on hand, trying to match the cost of their inventory to their pricing. Shows they're actively managing that volatility.
Okay, so putting it all together, what are they actually projecting for the third quarter? What's the guidance?
For Q3 2025, they're guiding revenue between $670 million and $685 million. That represents about 2% to 5% growth year over year. Adjusted EPS is expected between $1.85 and $1.95, which would be a nice 9% to 15% increase compared to last year's Q3. And they expect a Q3 tax rate similar to Q2, around 12.5%.
Seems pretty confident, although they did mention measured customer behavior, citing policy uncertainty. Are they being, appropriately cautious there? Or is there maybe a risk from those macro headwinds?
I think it's a balanced view, really. They're acknowledging the uncertainty out there, which is just prudent management. You have to. But what really struck me was their emphasis that even hitting the low end of that Q3 guidance would still mean new records for both revenue and EPS on a trailing 12-month basis.
Okay. So still record territory.
Exactly. So while they're being cautious, the underlying trajectory is still pointing up, setting new highs for the business. And they sounded very constructive about the medium and long term. Those big secular trends, reindustrialization, automation, digitization, that IT/OT convergence, they see those as firmly intact, even gaining steam. They feel like they're riding some powerful waves.
Yeah, connecting all these dots, it really feels like the solutions transformation isn't just talk anymore. It's genuinely starting to pay off, wouldn't you say?
Oh, absolutely. It's yielding tangible results now. Those specific wins, the hyperscale data center, the automotive spec, they're not just one-offs, they're like templates, repeatable models. They demonstrate exactly how Belden is using that IT/OT expertise to build higher value, stickier relationships with customers.
Yeah.
And that's the key, right? Expanding their addressable market, driving better margins. It's a fundamentally different, potentially more profitable business model than just shifting boxes or cable.
Exactly. And thinking back to that initial market dip after earnings, it feels like these kinds of specific high-value contract wins are the proof points the market needed to see. The ability to take industrial switches and make them critical for AI data centers, that shows real innovation.
Spot on.
And that global auto spec win, that shows they're plugging directly into major economic shifts like reshoring. It's concrete evidence the strategy is working.
And I think what really stands out now is Belden's resilience. They're navigating this choppy macro environment, but still delivering on their strategic goals. That initial market wobble might have been short-term noise, focusing too much on immediate uncertainties. But the recovery, that new high, it suggests investors are increasingly recognizing the long-term value being created by this strategic pivot. They're seeing Belden evolve.
All right. Now, for the part of the deep dive where things get, let's say, really interesting. You know the drill here. This is absolutely not financial advice. It's purely a thought experiment, a provocative idea maybe for the investment committee coffee chat.
Okay, challenge accepted. Given everything we've discussed, the strong Q2, the clear progress on the solutions transformation, that unique spot they occupy, bridging IT and OT, here's a thought to chew on. How about considering a long position on Belden, ticker BDC, but pairing it with a short position on a pure play, maybe more commoditized, copper cable manufacturer?
A pair trade. Interesting. What's the thinking?
The rationale is this. Belden is working hard and succeeding in shedding that old just a cable company image. They're becoming a sophisticated solutions provider for really critical infrastructure, industrial automation, data centers. That initial market skepticism after the Q2 beat, followed by the strong rebound, that signals, I think, a growing acceptance of this pivot. So going long BDC is a bet on them continuing to win these high-value deals, expanding margins through that solutions mix, maybe making smart acquisitions to bolster software and edge capabilities. The short position on the more basic cable maker acts as a hedge.
Against what?
Against, say, a broader industrial slowdown or maybe just continued volatility in copper prices. It helps isolate Belden's specific transformation story. You're essentially betting on Belden's relative outperformance as it moves up the value chain, away from pure commodity exposure. It's a bet on the market fundamentally re-rating Belden's business model.
That's definitely provocative. A bet on the transformation itself. So, wrapping up our deep dive on Belden's Q2 then. We've seen a company delivering strong financials, yes. But more than that, making really tangible progress on its strategic shift towards solutions. They're capitalizing smartly on big trends like IT/OT convergence, reindustrialization. Near term, sure, maybe some policy uncertainty clouds things slightly, but the long-term picture looks pretty constructive. The path forward seems clear.
Which really leaves you with a key question, doesn't it?
Yeah.
As those lines between IT and OT keep blurring, where else could Belden take this industrial-grade expertise? Could there be other unexpected high-value applications we haven't even thought of yet, where they can really unlock the full potential of this solutions approach? Are we just seeing the beginning of what they can do here?
Definitely food for thought. Where does that convergence lead next? That concludes our breakdown of Belder's latest call. We hope these insights give you a clearer picture and perhaps spark some thinking about the broader industrial tech landscape.